In the fast-evolving world of global finance, few moments have captured the attention of everyday investors quite like the revaluation event, or what is commonly referred to as the RV. For those holding foreign currency, particularly the Iraqi Dinar or the Vietnamese Dong, this moment could represent a life-changing opportunity. But the question many are not prepared for is, what comes next? What happens after you exchange? Tonight, we dive into the post-RV world, where strategy, discipline, and timing become just as important as the exchange itself. Once the revaluation is confirmed and the rate change is officially reflected in international banking systems, the first move is to proceed to a certified exchange location. These will not be your average currency booths at the airport. Expect higher security, strict verification protocols, and federal oversight. Identification requirements will be stringent. You'll be asked for more than just your ID, proof of funds origin, your occupation, and potentially your tax identification number will be requested. This isn't just a financial event. It's a national security issue and will be treated as such by governments worldwide. After the transaction is complete and the funds are wired or deposited into your account, many will feel a surge of adrenaline and optimism. But this is where emotion must give way to discipline. The first temptation will be to make large purchases, share the news widely, or perhaps even quit a job prematurely. That mindset could prove dangerous. This new wealth, if not managed with clarity, can quickly vanish. Historically, many who receive sudden wealth, whether through lottery, inheritance, or investment windfalls, end up in financial ruin within just a few years. The RV will be no different unless approached with a strategic plan. Immediately following the exchange, it is critical to move your funds into a secure, federally insured account, ideally one that offers layered access and is not tied to everyday spending. Consult a fiduciary financial advisor, one who is legally required to act in your best interest, not one selling commission-based products. You will need to establish what is known as a wealth preservation plan. This includes a diversified asset allocation strategy, the creation of legal structures such as trusts or holding companies, and a clear understanding of tax implications both immediately and long-term. Taxes will come into play quickly. Many assume that foreign currency gains are tax-free. That is simply not the case. Depending on your country's tax code, gains from a revaluation can be taxed as capital gains, ordinary income, or even under unique treatment for foreign investment proceeds. You need to speak with a certified tax attorney or CPA who has experience in high-value foreign currency exchanges. Do not trust just any accountant. This moment requires specialized expertise. The last thing you want is for the tax authority to come knocking in a few months, questioning the source and classification of your funds. Next comes asset protection. In the post-exchange environment, your name may begin to circulate in networks and circles you've never been part of before. People talk and wealth attracts attention, often the wrong kind. You need to prepare for this. Privacy and asset shielding become critical. Consider setting up limited liability companies, blind trusts, or offshore structures where legal. This isn't about hiding money. It's about protecting it from litigation, divorce settlements, or opportunistic lawsuits. The world changes once you have assets. Make no mistake about that. It is also essential to think long-term. While many will focus on short-term spending, the key to sustaining your wealth is to look 10, 20, even 30 years down the road. What will your lifestyle cost annually? What investments will generate consistent returns? What happens if the markets dip or inflation spikes? Your post-RV plan must include a sustainable income strategy, perhaps through dividend-paying stocks, real estate holdings, or fixed-income securities. Be cautious of speculative ventures and friends pushing business ideas. Most of those fail. Your capital must work harder than you do, but it must also be protected from unnecessary risk. Another important point, philanthropy. With wealth comes opportunity and responsibility. Many will feel a desire to give back, to donate to causes, or even to start their own foundations. These are noble intentions, but they must be executed with legal and financial precision. A philanthropic trust or a 501(c)(3) organization must be properly established, and donations must be structured in ways that do not trigger unnecessary tax liabilities. Again, Surround yourself with a vetted team of professionals, attorneys, CPAs, estate planners, and risk managers. The psychological impact of sudden wealth is often underestimated. Your relationships may change. Friends, family members, even coworkers may view you differently. Some will expect handouts. Others may distance themselves. Jealousy, entitlement, and emotional manipulation can come into play. You must mentally prepare for this shift. Consider working with a financial therapist or counselor. Establish boundaries early. Decide who you will and will not support. And stick to that plan. Emotional decisions can derail even the most carefully constructed wealth strategy. Security must also be heightened. That includes cyber, physical, and financial security. Your devices, email accounts, and online banking must be protected with military-grade encryption and multi-factor authentication. Do not discuss your finances openly online. Be cautious of phishing schemes, investment scams, and fraudulent advisors. Your phone, your home, your car, all may need upgrades to match your new financial status. These are not luxuries. They are necessities in a world where cybercrime is escalating and high-net-worth individuals are often the primary targets. For those with children, generational planning becomes essential. It is not enough to accumulate wealth. You must educate and prepare your heirs to manage it. Establish a family governance plan. Communicate expectations clearly. Consider involving your children in financial education programs or introducing them to trusted advisors. Entitlement destroys legacy. Education builds it. Start early and keep the conversation open. The post-RV world is not a fantasy. It is a responsibility. Many have waited years, even decades, for this moment. But the journey doesn't end at the bank. In many ways, it's only just beginning. If you fail to prepare, you prepare to fail. And in this environment, failure is not just a personal loss. It could impact generations. Avoid media attention. Avoid flashy purchases. Lay low. Let the hype pass. Operate in silence. Move methodically. The first 30 days post-exchange are critical. Any mistakes made here will echo for years. Every transaction should be deliberate. Every decision should be documented. And every step should be reviewed by professionals. If you've never managed large capital before, be humble enough to admit it. Surround yourself with those who have. Let experience guide you. This is not the time for ego. It is the time for execution. You have one shot to do this correctly. Treat it with the seriousness it deserves. There will be noise, YouTube personalities claiming they know secret rates, Telegram groups discussing tier systems, people urging you to wait for a second payout. Focus on verified financial principles, not speculation. Stick with banks, avoid unofficial exchange centers, and never wire money to entities offering VIP exchange packages. If it sounds too good to be true, it is. Your safety and financial future depend on your ability to block out noise and focus on facts. Finally, give yourself time. Don't rush decisions. You don't have to invest everything in the first week. You don't need to buy a house tomorrow. Let the dust settle. Adjust to your new life. Create a financial calendar. Plan your moves across quarters, not days. This is not a sprint, it's a marathon. Treat your capital with the care it deserves, and it will reward you with freedom and security. Mismanage it, and it could become the heaviest burden you've ever carried. As this monumental transition unfolds, remember, the exchange is just the beginning. What follows will define your future. Will you rise to the occasion, or fall into the same traps that have brought down so many before? The choice and the responsibility is yours.